All right, hey guys, Josiah here with EasyCaters.com, and today I'm going to do what's probably going to be a little bit more of a lengthy video on my relative volume indicator and the whole set that comes with that. So this is kind of uh, my flagship product. It's the thing that I'm proudest of that I programmed over the years, and it's the thing that I use every day on my own charts, as you can see here in the background. So, and really, it's not just a relative volume indicator, it's a whole set of indicators and scripts, including columns and scans that you can use in your day-to-day trading. You can see here that this is kind of a list of all the different scripts and everything that comes with the set. And this does change from time to time as I add different things, because this is basically my, like I said, my flagship product. I sometimes will add additional bonuses or change out, update it with new scripts, anything that I find valuable, that I think other users will find valuable regarding volume analysis. I tend to just add that to the set as a bonus. But anyway, so it comes with, of course, the installation tutorial. It comes with everything that we sell on the site, and then it comes with the all-in-one relative volume indicator, which is kind of the main script that comes with this set. And then because Thinkorswim doesn't allow nice user-friendly settings for columns, I basically include a separate column for each different volume type that you could use in the main study. So if you set your relative volume indicator to use, say, just pure volume, then you can choose the associated column for that. Whereas if you set it to use volume per range, volume divided by the range of the candle, then you can switch to that version. So shares divided by range would give you that. And there's also multiple ways of calculating the relative value, one of which is z-score mode. The other would be percent-based or relative mode. And so there's versions for that. So I provide different columns for each of those settings, just because it seems like the easiest thing for people to do. And you can import these scripts multiple times into your platform, and set up one version or one column to be say on a 10-minute time frame, and one column to be on a 15-minute or 30-minute time frame or a daily time frame. And so then you can sort your watch lists by how high the volume is on each of those different time frames. And you can find nested volume signals by looking, say there's high volume on the 10-minute and on the hourly. Then you can say, okay, there's kind of a nested signal there saying volume's coming in both in two different time frames at once. So that's different ways that you can use the columns. Then it has several different scans that would be associated with each of those as well. And it also comes with, of course, the Zenger volume ratio, a whole set of scripts for that, which includes some columns for the value of the Zenger volume ratio, just the signal itself, whether it's high or average volume, and then the pace, whether it's accelerating volume or decelerating volume, and a scan that's associated with that as well. So all those different things, and then several different scripts that come with it as well for evaluating the pre-market and overnight volume. And so all those things come with the overall set, and I update this from time to time, as I said. So that's what comes with the set, and this is the main kind of flagship indicator. So when you go in here into settings, you can see there's different modes that you can use. And one of the things that I changed in the latest version is you can separate out and choose independently how you want to calculate the coloration scheme versus how you actually want the bars presented. And so you can set the coloration mode to be based on the relative value, which would be typical relative volume. So you'd have like 100 would be 100% of the average. and 50 would be 50% of the average, so it would be low volume. And at 200 would be twice the average, so that would be high volume. So that's relative mode. And absolute mode just looks at the actual volume values, like 500,000 shares or whatever, and that's the absolute value of those of the volume for that bar. And so it will color based on being above certain thresholds, whatever thresholds you set, whatever thresholds you tell it to highlight based on. So if you want it to highlight a certain color at 250,000 shares and a different color at 500,000 shares, then you can tell it that. And likewise with Z-score mode, which is what I tend to use these days because it seems to be a little bit more accurate for what I do, you can give it Z-scores at which to highlight the changes in volume. So if the volume is 2.5 standard deviations, then it highlights this color, the color associated with that, and 1.5 standard deviations, or a z-score 1.5 would highlight a different color, and so forth. And if it's 2 standard deviations below average, -2 z-score, then it would highlight a darker color or whatever. So that's how you can change the coloration mode between each of these settings. But independently of that, you can also choose to display it as z-score values, or as relative values, or as absolute values. So as you can see over here, I've set up the indicator to show z-score values. And so the middle line at 0 is a z-score of 0, and so that would be exactly the average. And anything below that is low volume, and anything above that is higher volume. And so you can set different thresholds on the z-score at which to color different colors that you choose. So down here you can choose all your colors. And by the way, there is an error in Thinkorswim where sometimes the colors, all the color selectors, there might only show like 2 or 3 rows here, and sometimes you have to switch to and then switch back to make them all appear. That's just an error in the platform, and I just want to make a side note about that. But it's easy to make those appear. Just collapse the panel and re-expand it, or switch to a different tab and switch back. That takes care of it. And then, so this is the z-score presentation mode, the display mode, but I could equally display it as a relative display. And so you can see that now it has 100 is the average, and you can see that these are low values here and high values here. Or I can set it as a absolute display, where it displays the absolute volumes. And the only thing here is that you just have to make sure that your maximum filters down here at the bottom are set appropriately for whatever instrument you're looking at. So I have it cutting off any values above 5,000 right now, so I need to expand that to allow bigger values. So let's see if 25,000 takes care of that. And so now you can see it looks like a normal volume graph with the average showing as a normal volume average would show. But independently of that, it's coloring based on the z-score. So it's calculating the z-score in the background and coloring it based on that, but showing it to you using absolute values here. So it's just a little bit more flexible and allows you different presentation styles depending on how which one you find the most valuable. So I just wanted to demonstrate how that works. Now I use this, and a lot of people get confused by this. It's really quite simple, actually. The final output can be selected here, what you actually want to see in bars here. You can select that value. So if you only want to see the raw volumes, you can just set volume only and hit apply, and so this is only volume. I can also look at the ranges of the candles, and you can choose what type of range you want to look at right here. So you have kind of some upstream variables here that get fed down into the output. And so you can specify what type of volume you want to use and what type of range you want to use, and then choose how you want to combine those two in the final presentation so that you can evaluate those, whatever combination of those inputs that you want to evaluate. You can evaluate how much time it takes for a bar to form. And you can evaluate, and this is mostly useful on a tick chart. So you can look at the time between bars, which is not fixed on a tick chart. And so you can evaluate that, and that can provide some value on tick-based charts. And then there's, inverse values and volume divided by range, volume divided by time, range divided by volume, and so forth. And so there's lots of different ways that you can combine all these in the final output. As you can see here, you can multiply volume times the range, volume times the time, and so forth. So basically, if you're using volume only, then you just set your volume type here and be done with it. It ignores the range type because it's not being used in the final output. But if you set volume divided by range as the final output, then you need to select which type of range you would like to, feed into that final output, and which type of volume you also want to feed into it. So hopefully that makes sense to everyone. And so that's how those settings all work. These are kind of the final, these are the display settings. These are the output selectors, and how you want to calculate the values. And then down here we have some customizations for what type of average you want to use to calculate the relative values. So for that, I typically just stick with a moving average. I trade crude oil futures, and volumes are fairly consistent throughout the day. They do have a regular trading hours open, but I'm not looking to, but that surge of volume at the beginning of the day doesn't tend to confuse me too much. So I don't tend to use the time-based average as much, because I'm not as concerned about that. The time-based average is there especially for stocks, where there's a huge surge of volume at the beginning of the day and a huge surge at the end of the day. And the time-based average kind of takes that into account and allows you to normalize out those values so that you're comparing, the first bar of the day to the first bar of the day on all prior days. And the last bar of the day gets compared to the last bar of the day on all prior days as well. So it's kind of like comparing bar to bar on each intraday, intraday bar. So it's comparing the 9:30 bar to the 9:30 bar on the prior day, and the 9:30 bar on the day prior to that, and so forth. So that normalizes out kind of the surge at the open and the close, and helps you be less confused by the surges of volume. You can see what's actually high volume versus just the expected surge at the beginning of the day. So that's there for that kind of thing, kind of normalizing out the seasonality at the beginning and the end of the day. You can also do a blended mode, which takes kind of the best of both worlds. So moving average, of course, is comparing each successive bar as they appear, to the last 5 or 10 or 20 bars in the, that are being averaged together. Time-based average is looking at the past 5 or 10 or 20 bars at that particular time of the day. And blended takes the kind of a blend of both of those and outputs that as the final value. And you can choose the weighting that you assign to each of those. So if you want it to be 50-50, where it assigns a 50% weighting to the moving average and a 50% weighting to the time-based average, then you can do that. Or you can, say you want to value the moving average more, you can, set that one to 75% or whatever you like. So time-based weighting, you can set that to, say, 25, and so that would assign 75% to the moving average. And so that's how that works. But if it's set to moving average like I use it, then it ignores all that, and it just looks at the moving average type that you choose here. And it looks for the manual periods for the average, so you select how long of a moving average you want to use. I typically use 5 or 10 for the periods. And then all this, the rest of this is ignored for a moving average. And there's a lot of other settings here, a lot of options that you can customize. But maybe to touch on quickly what you can do with this, volume mode, you can use either share volume or dollar volume. Range mode, you can use either dollar range or percent mode, which percentage looks at the range in percent terms instead of dollar terms. And so that's useful for comparing longer term charts, like, say Apple in 2003 versus Apple today. They're completely different dollar values, but the percentage values may be similar. And so it's a little bit more fair of a comparison for longer term charts like that. You can also choose volume sources. So this is a cool thing that we added a couple of versions ago. And this allows you to choose your volume source independent of what chart you're looking at. So you could be looking at Apple, but you could be taking the volume source from, say, the SPY or some other stock. And same thing with the range source. You can choose to take the range from the SPY, or you could take it from whatever other symbol you want to take it from. And you specify those here in these inputs. You can also choose to take the volume from an indicator symbol, like the total volume for the US composite, and any of the other indicator symbols that Thinkorswim provides here in the indicators tab. There's all USA total volume, so you could take your volume from from the total volumes that are being traded in the total stock market across the United States, and plot that on a chart of Apple or whatever else you want to plot it on. And you can combine that with a range from either Apple or the SPY, or you can take your range from whatever other symbol you want to take it from. So a lot of different possibilities there. And moving on down here, you have your offset settings and threshold settings. Offset just tells it which bar to look at, 0 being the current bar, 1 would be 1 bar ago. And so that allows you to kind of fine-tune which bar you're using to highlight based on. Then your thresholds, these are going to need to be changed. If you change modes up here for the coloration, z-score, relative, or absolute, you'll need to keep that in mind, because down here I've got these set as z-scores, and if you change it to, and 0 in a z-score would be the average. So if you change to relative, then you'll need to set the average being 100. So you'll need to update these values if you change modes. And depending on what type of volume source you're using, you may need to also raise or lower these thresholds in general, because like raw volume, if you choose volume only, that's going to be a lot more volatile changes between bars than if you use something that involves division, like volume divided by range. That's going to be a lot more normalized and a lot less volatile from bar to bar. And so in one case with raw volume, you might want these thresholds to be very far apart, whereas in anything involving division, like volume divided by range or by ticks, or volume per tick or whatever, then that's going to be a lot less volatile typically, and so you might want to lower the thresholds, or bring them closer together to make it more sensitive to those tiny fluctuations. So just keep that in mind. And you can show the levels of each of these levels on the chart if you want. I keep them hidden because I don't want to actually see all the lines on the chart, but you can show those if you want. It's set to yes here, but you can also individually control them down here, and so I have them unchecked individually down here to show plot. You just uncheck that and it will make that individual plot disappear. I can also do the same thing with the average here. You can see it can disappear there as well. And the output here is the actual histogram bars, and you can present those as something else. If you don't want the histogram bars, you can use lines or dots or whatever you like. But moving on, so we've got the thresholds, we've looked at the levels. You can show clouds at each of the levels, and it could be darker and darker clouds depending on what level you're at. So you can turn those on if you like. Show volume subgraph. So this is a cool way to use it if you want to save screen real estate. You can see I have the histogram down here at the bottom, but if I want to hide the volume subgraph, we'll say show volume subgraph no, and I've dragged the indicator up here to the price graph area instead of the lower subgraph area. And so now it's still coloring the bars, but you don't have to see the histogram itself. And so that's a way to save screen real estate on smaller screens. And I'm going to just set this back to yes. And so now if I hit apply, it's going to look crazy, but now I just need to drag it down to that lower subgraph area again. And so now it'll separate it out like that. So that's how you use that setting. Show paint bars, you can turn that on or off. If you just want to look at the coloration on the histogram itself, you don't have to color the paint bars if you don't want to. I actually prefer it with it on, and sometimes I don't even look at the histogram bars at all. But it can be useful for looking at smaller fluctuations between bars. You can change to Heikin Ashi mode, and so that allows you to look at the candles not as normal candles, but as Heikin Ashi. And so if you're taking the range into account in the final output, if you have volume per range selected, or range only or something like that, then you can opt to calculate the range as Heikin Ashi candles instead of as normal candles, and it will color based on those changes instead of the normal candles change. Color based on the close, so most candles are colored from the change from the open, but you can instead color it from the change from the close instead if you prefer that. That's the old bar style of coloration. So show current bar labels, so you can output the current bar's values in labels up here, and this will tell you how far above or below average it is, and the z-score, and it will also self-sort, so it'll tell you we're looking at the 1020 bar, and it self-sorts, so you start with the max value for this bar, the min value for this bar, and then the average value for this bar, the midpoint value between the max and the min, and then the current value. And so the current value automatically sorts between wherever it is. You can see it's currently below the midpoint and the average, but if it were above that, it would sort itself to a higher point here, higher up the chain. And so that's useful for like the time-based average, especially where you can look at the maximum value for that particular time slot, the minimum value for that particular time slot, and what the average and the mid and the current are compared to that. So that's how the labels work. I'll turn that to no. And you can control the individual labels here with each of these settings. You can turn any of them on or off that you do or don't want. So the z-score label is here, the percentage label is there, and then of course you got the actual value itself at the current value right there. So that's how you would control each of those. You can offset the time zone if you want to do that by adding like 100 would be 1 hour, 200 would be 2 hours, and so forth. But typically you don't need to touch that. You can use alerts whenever a bar crosses above any of the thresholds that you choose, and you can also choose to only let it alert you after the bar closes, so you can avoid false alerts that happen intra-bar while the bar is still forming, and so that's typically how the default setting would be set when you install it. Then for each of the modes, z-scores and relative and absolute volumes, you can set a minimum and a maximum filter that will chop off the values just for scaling purposes to keep the graph easy to look at. And so like if I chop the values off, so I'm on a relative, no, actually I'm on an absolute value presentation right here. The colors are being calculated with z-score, but the presentation is absolute values of the volume bars. And so I can set this to be, you know, say 6,000, and it will chop off the bars at 6,000 right there. And so you can just see anything that's below 6,000 showing up as a, you know, anomaly. So you can set values for each of those. They come up with some good defaults for how I typically use it, but you might need to adjust them depending on what kind of instruments you're trading and so forth. And I have a kind of a beta feature that I'm testing right now, which is to show, it's an attempt to show good buying locations based on the volume. And so you can show or hide those. This basically looks for, has price recently moved down before the volume signal happened, or has price recently moved up before the volume signal happened? And so then the volume coming in kind of typically indicates a resistance to that prior move, and that whatever that direction was, so you can consider it a potential bullish sign if it's recently come down and then it hits a support area. Then you can see we got a reaction there on the upside before continuing lower. And you can see there was also support that came in on this candle, and it thrust up again before selling back off. So it just wasn't enough support there to hold it, but this was telling you there was some kind of support that was getting broken there. So that's how the those arrows are set up to attempt to find good buying and selling potential locations just based on volume and direction. But that's something that may change, may be updated or removed in the future. So plots, I've already talked about how you can control each of the plots, the up signal and down signal arrows, thresholds, the average plot itself, and then the final output values, and you can choose the colors for each of the different thresholds that are being crossed, and you just match those up with the threshold 0 through 5 up here. Down here you see T0 through 5, and so you just select the color based on whichever threshold you're wanting to look at. And plus, of course, means positive, you know, an up bar. Negative, minus means a down bar, and equal means a you know, a doji bar. And so those would be gray in this, you know, different shades of gray. And then you can see the less than and greater than symbols. So it's saying color this color if it's a up bar and it's less than threshold 0. Color it this color if it's an up bar and greater than threshold 0. Color it this color if it's an up bar and greater than threshold 1, and so forth. And so that's how you read those symbols there. Or abbreviations, or whatever you want to call them. So here's the alert settings, and so each of these, there's an alert for each of the thresholds. So it's saying Relvol threshold 5 was crossed above, and you can choose what sound it plays here, show a message and what message it shows in the message center, and you can enable or disable each one here. Down here you've got the global colors, which you can choose the colors for the clouds, shading areas for each of the thresholds. You can also choose colors for each of the labels, the summary labels I had showed earlier. So that's how you control those. So that's a rundown of each of the settings. One thing I didn't mention is how to use the time-based average. I should have gone over that a little bit earlier. Time-based average is pretty simple. You just, if you set it to time-based average, then it will start taking this into account. But if you leave it on auto mode, it will just take all the bars on the chart, whatever length of time you have available in the history that you've loaded, and it will use those to calculate, you know, the per bar average. If you want to do something specific, then you can change this to manual mode. And so you can say periods for average method manual, and then choose how many days you want to use for the calculating the average. If you don't want to use all the bars on the chart, all the days on the chart for calculating the average, then you can just select, the last 5 days or the last, however many days you set here. If you, likewise, if you want to select a different number of bars per period, so each day on each time frame, on a stock chart, I think maybe it's 78 bars per day or something like that on a 5-minute stock chart. And so you can type that in manually here if you want, if you set this to manual mode, or you could adjust it to something crazy, whatever you want to test out. And if there's a specific type of time-based average you want to use, like if you're on a weekly chart, the time-based average will average based on that particular week during each year or whatever. And if you're on a monthly chart, then it will look at that month each year and so forth. If you're on a daily chart, it will look at that day for each month. And but if you want to look at that day for each week, then you can change that and adjust it here and say, there's five periods per, or 5 bars per period, and I want to look at so there's 5 trading bars in each week, 5 daily trading bars in each week, and I want to look at the last 20 weeks or whatever. So that's how you would set that up here if you want to do a manual setting. Otherwise, it uses some reasonable defaults for the automatic mode, and so normally you can just leave it that way if you want to use the time-based mode. So anyway, I just wanted to touch on how that works. And like I said, typically you'll just need the moving average. It's pretty simple. And on stock charts, it's the only one that you might want to consider the time-based average. One thing on the time-based average, on a stock that has earnings or a big announcement or some kind of big news for the day, that'll result in a huge surge of volume for the whole day, not just on a particular bar. And so you'll see that each bar will be highlighted, the maximum threshold value. And so that the time-based average can be less useful on earnings days and days where there's big news releases. So in that case, it's good to have it on either blended mode or moving average mode. Or alternatively, if you want to stick with the time-based average during those days, you can actually just raise the thresholds to make it less sensitive, so it takes that into account. So that's one case in which the time-based average, it can get a little bit wonky depending on if there's a huge surge of volume from news that's a general surge for the whole day or the whole week or whatever that's happening. So just keep that in mind. So that's settings for the indicator, and I did want to kind of touch on how I actually use this. And you might have noticed that I have multiple time frames loaded on my chart here. And one of the best ways that I've found to use, I use relative volume per range for the final output. You can see volume per range, or volume divided by range. And I've set the volume type to shares and the range type to candle, which just looks at the high to the low of the candle. And I use a 5-period whole moving average. And typically I'll use absolute presentation or just hide it altogether. Or sometimes I'll use relative presentation. But I usually use the z-score as my coloration mode. And so that's what this looks like here. And so the best way that I have found to use this as a standalone type of system is to look for nested signals. And so what I will do, so you can see this is a monthly chart over here. There was a signal on the monthly chart here on crude oil, which was accompanied by a weekly signal that was nested inside that monthly signal. And if you looked on the daily chart at the same time, there were several signals that were happening at the same time, right at the tail end of that range. So this was saying there's a lot of volume, kind of pent up energy happening in this area here. Actually, is this particular month, June of last year, and so when the high of this week broke, that was a good time to get long. A lot of times these relative volume signals, they are really effective bar break signals. So sometimes you'll have fake out breaks, as you can see here, where we had a signal near the top of the range, we broke out above it, and then the real direction was below. And so you'll see this happen a lot. But again, if you take the context into account, you've just moved up all this range, and we put in this indecision candle. The first test outside of that range was to the upside. So a lot of times that can be a suspect rally, and this happens on all time frames. So if your bias is that price should be going down anyway, whenever you see this, you can actually use that as an opportunity to get short, and the vice versa for longs as well. So anyway, but you can see here there's a daily signal. You could buy over the high of this day, which fed into a weekly signal, which fed into a monthly signal. And so this led to a multi-week rally, multi-month rally. And so this was a nice context for, this gives a bias for a long period of time into the future due to this being a longer term signal, where you can, stick to taking mostly long trades during this time period. And so that was the way I traded that last year. And so now price is actually retraced back down and has given another monthly signal. And I'm actually biased short until we get below this range over here. But short term, this actually might push up a while before coming back down. So that's kind of how I look at this. I kind of develop a bias and then use the relative volume candles as timing mechanisms for actually getting long or short. So I tend to think of relative volume as something that needs to be used as part of an overall system or underlying, price action approach or something like that. But it can really be informative for timing your entries, because as you can see here, like especially the higher time frame signals in the right location can really be the energy that produces a large move in the stock. And you can see, so this launched the first leg and the whole move in general. The pullback with volume coming in near the lows launched the next leg up. And so that's, and then in this case here, you would look for, so this gives a false thrust above, and when this breaks below, this is kind of your signal that, hey, things have changed. And so the retest is sellable, and so forth. So this level has broken. This is essentially telling you in real time that there's support and resistance here. And so we try to go above and continue the rally, but are not able to. And so when we break in the opposite direction, that's notifying you of a shift, and that support has no longer held. So that's how I look at it. I think it's most ideal to be combined with other principles like price action and different ways of evaluating price movement. So you don't want to just look at every highlight and say, that's volume, so I need to buy here or sell here. Take the context into account. So you can see this has moved down recently, hits support, and volume comes in, indicating that there might be a bounce and that kind of thing. So that's how I look at it. There's lots and lots of different ways of trading this. The volume per range is kind of Similar to volume spread analysis, it's just a more easy to understand or easy to read version of it with less specific rules, so it can be kind of integrated into any system. There are essentially two types of signals that I look for with volume per range, which is what I use the most. And so I look for, the typical thing is to look for strong volume on a impulse move and weak volume on a pullback. And that's true, but I also want to see volume preferably come in on some small time frame down here at the lows. So I want the general pullback to be low volume as a whole, but I want volume to appear at each of the extremes. And so that might not be on, on every time frame. You might have to zoom into a lower time frame to see it. But you can see here at this time, on this particular week, we had pulled back and volume was put in down here at these lows, and that's kind of what I like to see. And of course, on a smaller time frame even, you would expect to see volume down here at these extremes, down in the tails down here. And then, so that's the one type of volume that I look for, volume resisting the previous move and indicating a bounce might be coming. The other kind that I see is breakout churn, is what I call it. And basically what this is you'll typically see churn come in near the highs of a range. So you can see a range had kind of formed here, and as we exited that range, a lot of times you'll see volume come in signaling the end of the range. So if you're expecting a potential breakout to happen here, when you see volume come in here at these highs, this is the point at which you want to start buying instead of resisting that buy and selling. This is, we're in an uptrend already on the daily. We've pulled back. We've had a multi-legged pullback. We're testing the high of this range, and we're pushing through it. And so this is saying there is resistance here, but we're churning through it. There's demand is overwhelming than whatever supply is up here at the highs. And so that can propel the next leg up. So those are the two types of signals I look for. I typically don't trade the breakouts, but a lot of people do, and so this can be a good way where you can see this candle here and use it as a timing signal, perhaps buying the high or buying the break of the body or something like that. Same thing here. You can see as this high, low, higher high came down, we had breakout churn that came in at the lows down here, and so it said there was resistance here or support, but as we broke below that, that's perfect timing for the next move. And then support volume comes in at the extreme and you get a bounce. And so that's the kind of thing that I look for. Then up here near the highs, volume comes in again saying there's resistance. Near this one as well, you can see it's touching the same range of price action as the prior signal, and that happens a lot, as you can see here and here. There's some kind of resistance and support level right here. And so that's how I read these. And so we do a kind of a feint move, a fake out above, and then continue the trend that had developed. So that's how I evaluate these, but I don't evaluate them this way in a vacuum. I'm also looking at other price action to kind of determine where I think price is going to go. So you can see here, I was interested in this being a long signal because we had sold off for multiple weeks. It looked like we're having trouble continuing down. So this is kind of, a lot of absorption happening here in these wicks or tails, whatever you want to call them, down here at these lows where there had been a previous strong move off of. And we saw that I saw that these exposed highs were up here as a potential magnet for price to want to break above that. And so, all those kind of things go together to say, hey, this might be a good long, not just the fact that there's a highlighted green candle here. And that brings me to another point, that the color of the candle should be mostly ignored or just, even thought of as a contrarian signal sometimes. because you can see here, this is a bullish candle, but it's red. This is a bullish candle, but it's green. So it's not as simple as looking at the candle color and saying it's bullish or bearish. It's more about the context in which the candle highlights, which tells you, you know, what it's actually trying to tell you. So this is a red candle here, but it was bullish at the time, and it led to a 2-month rally, or a 2-week rally, and even into the 3rd week over here. And this is a red one, but it led to a further decline, at least in the short term. So this was red, and this was bearish, you know, and you can see there was a little head fake above it, just a tiny wick above it, and then it began the downtrend. And you'll see that a lot at the beginnings and ends of trends. On some time frame, at least. Not always the time frame that you're looking at, but you'll a lot of times see it on some time frame. Yeah, so I'm trying to think if there's any other tidbits about relative volume analysis. Now, this is particular to, you know, relative volume per range, which is what I said earlier. You know, this is what I typically use. A lot of people will actually want to look at the raw volume. I don't typically use that as much, but it can be useful for, like I said, evaluating, you know, increasing volume on an up move, decreasing volume on a pullback. That's a valid way of looking at that as far as I've witnessed in the markets. Like I said, the only caveat is that I do like to see a small uptick on some small time frame at the lows of the pullback and at the extremes. So up here at the top, I would expect on some time frame there would be an uptick in volume, and as you pull back, the volume would be slowly decreasing and so forth. But down at the lows, you would see a surge of volume come in near the lows on some time frame. So that's how I look at that. So raw volume definitely can be useful. I find it easier to read based on, you know, relative volume per range. So that's typically what I use. So hopefully this has been helpful. I've gone through both how to use the indicator and how to set it up and accomplish whatever settings that you want to accomplish. I also went over kind of how I use it. I do have some additional videos and playlists here on the YouTube channel that go over how, you know, different systems that I've used over the past several years. I used equivolume for a while. I used I tested a system short term using equivolume and volume per tick to look for light volume pullbacks on a small time frame chart like a 2-minute. And so there's a whole playlist of those kind of trades going over how to use it. There's also a playlist looking at just relative volume signals and how I've used it in other types of trades. One thing that I've used it in stock trading is looking for nested signals or embedded signals at the opening range. So you can look for a tight opening range, you know, say a candle like this, where it's an indecision candle at the beginning of the day, and you could look for maybe the first candle of the day, the first 30-minute candle during the opening range is a relative volume signal. And then maybe inside that 30-minute candle, there are 2 15-minute candles, and one of them is also a relative volume signal. And maybe inside that 15-minute, there's 3 5-minute candles, and 2 of those are relative volume signals or something like that. And so, and maybe it will do a fake out move, you know, below those signals, and that can give you an idea that, hey, there's, you know, some manipulation going on, and we're about to make a move in the direction of the trend instead of counter trend. And so, using relative volume, you can find situations like that where there's pent up market energy is what I kind of think of it as, and the bigger time frame signal can tell you, hey, this is happening. There's a context here where a big move might be about to happen, and the smaller embedded signal in the 5-minute or the 15-minute or whatever you're looking at can actually time your entry and tell you when to get long or get short. And especially if you see one of those type of fake out moves counter to the direction you're expecting price to move, then that can really confirm, hey, this is being manipulated just before the real trend starts. And so that's the kind of thing that I look for. So intraday stock trades can be had just from looking at the opening range and relative volume per range during the opening rotation of the first 30 minutes or hour. So anyway, hopefully this helps with your analysis and helps you get your indicator set up how you want it. If you have any questions, you can always email us on the website. I did want to mention the indicator set does come with a TradingView version as well as the Thinkorswim version. So this is what that looks like. And I have some other indicators on here, but this is a normal volume, absolute volume display here, and this is a relative volume per range display down at the bottom. That's actually colored in the price graph. And so I'm looking at both. I have two different versions added to the chart here. One is looking at the raw volume and one at the relative volume per range. And so this is what it looks like on TradingView, and here are all the settings for that. You got your final outputs, your upstream volume and range selections, display mode and coloration mode, just like in the Thinkorswim indicator, and some different selections, all related to the same settings that are available in Thinkorswim. This one is a little bit more limited in what it can do, but it's not by much. It's pretty similar, and I use it every day as well. So I just wanted to mention that that's available. Just at checkout, you can reply to the confirmation email with your TradingView username, and I will add you to access for these as well if you want to do that. So that's what it looks like. This is the website, easycators.com/relvol. RELVOL is the shortcut. If you just type in easycators.com/relvol, it will take you there. And hopefully this will answer any questions you have and kind of demonstrate the capabilities of the indicator and how at least one trader uses it. So I hope that this has been helpful, and I will talk to you next time. Thanks.